Stocks bouncing right back after the first down day in a while yesterday, from red to green overnight. Joining us, Peter Andersen, the founder of Andersen Capital Management. It's been a bull in the right place, and without the need for a big Fed pivot. That's still your view, Peter?
Absolutely. I've never thought there was ever going to be a Fed pivot. I thought we went through enough pain, gnashing of teeth through the incessant rate hikes, and let's just let the wine breathe a little. We've just uncorked the bottle, right? So let it breathe and let the economy absorb all these rate hikes before we start thinking that we have to immediately give a rate cut. It just doesn't make any sense to me, Oliver. I don't know what people are thinking and what kind of calculus they're using for that, but I mean, it would be way, way too fast unless there were some real disaster, which thankfully we have not incurred yet.
Yeah, true. The market generally thinks it still is a question of when, not if. But is the fact that stocks are doing just fine, the further we push back the timeline, supporting your point that we don't need any support?
Let's push that back and let all the other pundits, the economists that have been saying now for, is it over a year and a half, that there is an impending recession. I mean, you can only push that stuff out. Well, I guess you can just keep pushing out as long as you want, and sooner or later you will be correct. But I agree. I do not, I'll go on record today saying I do not expect there to be any rate hikes this entire year, and I'm absolutely fine with that. I actually would be a little bit upset if there were rate cuts. I don't know if I said rate hikes earlier, but
Yeah,
rate
no,
cuts.
it's okay.
Yeah.
We know what
Yeah.
you mean. All right,
Okay.
so convinced we're not going to get a cut, and market handling it in a mature manner, given that we've got some pretty big earnings strength. Generally, that earnings strength has been fairly concentrated. We've talked about that concentration.
Sure.
Where is the status in the way you play that? Do you think it still is an okay place to have your chips in that basket, or is diversification becoming more important?
Yeah. Good one. The reason I'm so optimistic is not that I'm owning a basket of stocks that are diverse in every possible sector or industry. The reason I'm optimistic is if you pick the right sectors, for instance, I think you can sleep at night and be hopeful that there aren't going to be any rate changes. So because of that, I have focused on themes that I think are resilient to, frankly, direct torpedo hits. And one of them is artificial intelligence, but I would like to rephrase that. I do not consider AI as real AI. I would just rephrase it as high-speed computing. So I think high-speed computing, this build-out that we're experiencing now, will have tremendous impacts, but it's not going to take over the world. And secondly, and very related to this, ironically, is cybersecurity. We've only been thinking so far that AI has all these benefits, but like a double-edged sword, it has another side. And the other side is going to be when the bad guys get a hold of this, and they look like they've started already. So this arms race and cyber protection will just continue ad infinitum. And although there are a lot of downside potentials for that, certainly as an investor, you do have a lot of upside in investing in cyber stocks.
Okay. We saw Crowdstrike with a pretty impressive report overnight. It seems like some of these companies have shored up the bottom line. There used to be a pretty clear relationship. High growth meant no profits. Does it seem like we're moving out of that phase into something a little bit more traditionally shareholder friendly?
I think so. CrowdStrike is interesting results, right? Because it's coming on the heels of Palo Alto, and their CEO, I think he actually regrets what he said. He probably could have rephrased it about something about the fatigue of customers and spending money for cyber protection. But I
Yeah.
will tell you this, I think if the United Healthcare hack, which happened about a week ago, is not the national panic that it should have, then we will have something larger, unfortunately, this year. It's just a matter of time. I think that cyber attacks are the new front line of warfare. And because of that, it's going to get a lot more attention. And you can mark my words that once United Health got hacked, I'm positive that all the CEOs of every competitor out there has rushed to their board of directors and their security chiefs and asked them, what are we doing? Could that happen to us, and how protected are we? So that just plays wonderfully into investing in these stocks, doesn't it?
You feel very strongly about this subject, Peter. CrowdStrike, not the only one you like. Walk me through the positioning for the cybersecurity threat that you see ahead.
I only own 12 stocks, Oliver, so because of that, that's extremely aggressive. So you have to a bit offset that with the holdings, of course, and they are barbell. But when it comes to cybersecurity, I tend to be on the more, if I can say this, conservative side of those stocks. So I have invested in stocks that have positive cash flow. Some of the others that we've mentioned on these networks are not positive in their cash flow. So the three that are the ones that I've invested in, which are Palo Alto, Fortinet, and CyberArk. They have been around. The CyberArk and Palo Alto have been around for a long time. In fact, I would say Palo Alto was the grandfather of cybersecurity. And think of it this way, just the psychology of all this. I mean, it's so interesting investing, right? Because it isn't just quant stuff. So if you're the chief of security at a large company, are you going to tell your board of directors that, hey, I'm taking a flyer on a startup for cybersecurity, or would I prefer to go to the tried and true Palo Alto networks that all our competitors are using? So that actually comes into play too. It's not the only factor, but it's an additional factor that I think a lot of analysts might not, they might overlook, the soft factor, so to speak.
Okay, like that point, as well as the cash flow positivity. CrowdStrike swinging from a loss a year ago to 20 cents per share this quarter. So I guess they might be on next on your list if they can keep it up. Peter?
They might be. I mean, you have to keep that up. One quarter doesn't make a trend, and we'll wait and see.
All right. Appreciate the catch up. Great conversation. Thanks a lot for the insight into what you're buying, Peter, and avoiding.
You're welcome. Bye-bye.
Yes, sir. Peter Andersen, founder at Andersen Capital Management.